What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing the overall situation in the markets right now. So yesterday I released this video featuring Stanley Druckenmiller and a warning from multiple billionaires that there could be a continued recession, an earnings recession, and that maybe the markets might stay relatively flat for the next 5 to 10 years. And this, of course, raised a lot of eyebrows. People said, Kev, what are you trying to say? Well, first of all, I'm kind of just relaying what they were saying. I'm just telling you guys what the billionaires' current view is. And the first reaction we got from the comment section was, of course, don't you think the billionaires are lying to us and they just want to trick us? I mean, yes, of course it's possible, but I personally don't think so. That does not seem to be what's happening here. They seem to be giving very clear opinions and outlines for the next major shift in the macro environment. And actually, what I'm seeing from news channels like CNBC is that they're saying the worst is over, buy the dip, right? That's what the news is saying. That's sort of like the unintelligent comment that's being made. What they are saying seems to be much more thought out. So if you have not seen this video, I urge you to watch the video. It's very interesting, and at least maybe just consider that what they're saying may be valid, right? It's not guaranteed. They could be wrong. You know, it could all be wrong. We just go up only forever, right? Because we've been on an up only trajectory for 10 years. And now they're saying, okay, maybe some volatility and sideways action in the overall markets. We're going to talk about what that means in today's video. What does that even mean for Bitcoin, right, related to this video? So first, check this video out if you haven't already. Before we get started, be sure to smash the like button and also subscribe to this channel. So today in the markets, like we were just saying, Bitcoin, what was I saying? So today, Bitcoin is seeing a lot more demand in the short term than the stock market is. The S&P at the end of the day dumped back to the lows, and Bitcoin is rallying up, attempting to get a bounce. On Twitter today, I said Bitcoin's holding the range while the S&P continues to get sold into. If stocks can manage to find a bounce, then Bitcoin should bounce quite significantly, just based on the fact that there's not much demand for the overall stock market today, but there is demand for Bitcoin today. So if the stock market was going to get a rally this week or next week, well, Bitcoin should be able to bounce pretty nicely. But the situation that we're in currently is that the S&P is sitting at, just above the June lows. And these June lows are very, very critical. This is sort of the point between, a semi-bear market versus a real recession correction. And that's because of what we were just mentioning earlier, the 200-week moving average, which is currently right along those June lows. So the price level is basically 3,600 for the S&P. That is the most critical point, because every time in a bull market, when we have a major dip, we bounce right off of the 200-week moving average, discounting the COVID flash crash. You go back in time before the early 2000s, in the 80s and 90s, we're bouncing right off the 200-week. Now, why am I talking about such high time frames? Well, we're talking about recession periods, prolonged pullbacks. And you look at the 2000-2001 dot-com bubble, we dipped well below the 200-week. 2008 crash, well below the 200-week. If you look back at that period, that in the last video, Stanley Druckenmiller was saying that we could be entering a flat market period like the 60s to the 80s. Well, we're dipping below, falling below that 200-week for multiple weeks in a row would basically be the signal of weakness that we could, in fact, be looking to enter a sideways market for 5 to 10 years. Now, what is a sideways market? Does it mean the market does nothing at all? No. Look at the 60s to the 80s. This was the reference that Stanley made. You dip down, you hit a new all-time high. You dip to a lower low, a new all-time high again. Multiple all-time high touches in what is considered a sideways range. And remember, we're looking at the Fed funds rate here. We're looking at the 1980s era to where we are now. Every time the interest rates go up, they made a lower high than the previous high, generally speaking, and they just trended down. And what happened from 1980 all the way up to 2020? Well, we were just looking at it. Well, let's take a look once again. Here we go. 1980 to 2000, massive bull run with a couple major corrections in between, almost up only. So that is when the funds rate was trending down to almost near zero. What was happening on the flip side when interest rates were coming up as it was going? We were moving into the 80s. Look, a sideways market, choppy. Why? Because when interest rates are high, liquidity is more expensive. For a long time, as interest rates were coming down, you could borrow money for cheap. Liquidity was cheap. We were just printing money, borrowing money, pumping the markets. Now, if this trend is going to have somewhat of a reversal back up, even if it's not as significant as the 80s, we probably won't be going this high in interest rates. But even if it's just, coming up and trending up for a little bit, well, this could cause a little bit of stunted growth in the markets. It could be a factor that actually supports Stanley's message about a flat market, which is why we're talking about if the interest rates are going to be going up and remaining high, which is very likely, we could see, maybe continue downside possible, but just like the 80s, rally up, test a slightly higher high. We hit all-time highs, and then everyone says, see, look, the bears were wrong. Stanley was wrong. We're at a new all-time high. But guys, that is what is expected. We're expecting that. But we're expecting a retracement back into the range, maybe even a lower low. More volatility, kick the price back up, go sideways, and then rally out in the next 5 to 10 years, which is amazing trading opportunity. There's a lot of opportunity in there. And with a macro environment shift like that, there's a lot of new technology that comes out. There's, the world starts to move in different directions. There's a lot of new companies that are formed, just like in the 80s, so on and so forth. All the biggest names today, a lot of them started back then. So there's a lot of opportunity in a sideways market, not only to trade, but also to, look for the next big names, big players. Because guys, the world is about to change dramatically. The technological shift we're about to go through is going to be the biggest ever in human history. So if you can find the next big names in the highest tech fields, maybe artificial intelligence, you will likely be, very well off, I would say. So, right now we're entering a global macro shift, higher interest rates, war, all these things. Yes, that could lead to a slightly unstable market. But it doesn't mean the opportunity is not there, guys. The opportunity is still there. And that's why I'm going to title this video, The Glass is Half Full. Because you can look at it multiple ways. If we're talking about a flat market, you could be all sad and depressed and think there's no opportunity. But in my opinion, it's actually the opportunity of a lifetime. Right? We're not just talking about Bitcoin here. We're talking about everything. We have the opportunity coming up to pick the next top players in the global economy, which will be created in the next 5 to 10 years. So the glass is half full, in my opinion. And this scenario is a positive scenario for those of us that could come out on the other side of this macro shift, 5 to 10 years, and be positioned for one of the greatest economic booms in technology we've ever seen. The biggest shift of all time is coming. So the glass is half full. And now, of course, you guys are probably saying, Kev, stop talking about this. What about Bitcoin? Tell us about Bitcoin. Okay. Well, Bitcoin, as we know, is correlated to the stock market. Just a couple of years ago, when I would talk about the Bitcoin stock market correlation, people disagreed. And now when I talk about it, they just pretend they always agreed. So now there's been a shift. People realize it now we know it. Okay. So if we're just entertaining this idea, right? This idea from yesterday's video, which is not a guarantee. It's just, based on the funds rate, how the market behaves. Look, sideways market, pumping market. Okay, are we going to get any sort of a shift back up? Could be a little bit more sideways. Well, the thing about the correlation with Bitcoin and the S&P, this is the thing about the correlation that people may not understand, is that when the stock market is bullish, Bitcoin is sort of free to do whatever it wants. It can be like ultra bullish if it wants to, right? Speculators are confident. Speculation can go out of control, and we could fly way higher than you think. When the stock market's bearish, well, speculation stops, and the correlation actually increases as the stock market's going down, right? It just starts, then uncertainty increases, confidence decreases, and the correlation snaps much tighter and they move together. So in a bull market, well, or at least in a major uptrend, remember the S&P can still go up to new all-time highs and then come back. But in that up environment, Bitcoin can be as bullish as it wants to, and we have evidence for this. Check this area out. The yellow line is the S&P. S&P was going generally up, but look how much more parabolic Bitcoin was in this range until China did the ban and Tesla said no Bitcoin, right? Until that little dip there, Bitcoin was so ultra bullish. And my point is, Bitcoin can be as bullish as it wants to be when the S&P is going up. So if the S&P sees a rally above, again, that June low right there is so critical. If we get below that, Bitcoin's going to dump tremendously. But if we can get a bounce here, whatever, or even if we do that, Bitcoin goes lower, the next major up phase for the stock market before a reversal after all-time highs, something along those lines, Bitcoin can be hitting all-time highs, going to 100K, going way higher, way faster than the S&P. So in no way am I discounting the idea that Bitcoin, Bitcoin's going to, Bitcoin will follow the S&P directionally, but it doesn't mean it can't sort of do its own thing in a bullish environment. So Bitcoin can still maintain its classic extreme growth rate. So you guys get the picture. The stock market could be, hitting all-time highs, but going generally sideways for many years. Bitcoin can still go up as fast as it wants to, as fast as the speculators decide to shoot the price up, as much demand as there is. Bitcoin can still be very bullish in a uptrend in the stock market. Right, so that's big picture stuff. What I'm saying here is really not about the short term. So when I'm talking about, maybe a recession, an earnings recession, and, I don't know, this week Bitcoin bounces because the stock market bounces, something like that. People are going to say, oh, Kev, you were bearish. Well, guys, I'm not talking about this low time frame. In the short term, Bitcoin is still above the June low and a slightly higher low and in a potential double bottom pattern. It's still in the double bottom pattern, which could be a bottoming pattern that results in a push back up to the log scale downward sloping trend line, 25K. All that kind of stuff can still happen, even if all of this stuff is going to play out, right? This is what I'm saying is all big picture. So don't miss or confuse the two. Yeah, I mean, that's kind of, I just wanted to explain myself a little bit more about what I was saying yesterday. There's no real signal of a reversal just yet. So it's hard to make a call. I mean, today's demand shows that Bitcoin wants to bounce, so I suppose it could. So not much of a signal here yet. But that's not really, the short term is not really what this video is supposed to be about. I just wanted to give you guys a better idea of the long-term picture that was discussed in yesterday's video, maybe explain it a little further for those of you that had questions. But that's it, guys. Hope you enjoyed this video. Hope you found it helpful or interesting. Smash the like if you did, and subscribe to this channel if you're new, and I'll see you all in the next video.